Good morning. Today is Thursday, September 25th, 2014. Here I give a wrap-up of this commodities complex as it stands today at around 10:45 a.m. I'd like to highlight a few points that have happened in the international scenario as far as commodities are concerned over the past couple of days. The most important being the dollar index. Dollar index has hit a 4-year high, trading well above the 85 and now trading at 85.4 to 85.5. As the dollar index gains in strength because of the data that come out from the US seem to be very, very positive, especially the new home sales data which came out last night hit a 6-year high. So this has strengthened the US dollar index, and the likely impact is going to be to hold the commodities down on a broader scale. Although in dollar terms they are also holding up today and showing positive signs as of now. Overall scenario in China remains a little bit more depressed, as a couple of days back the finance minister of China has also said that no further economic stimulus is likely to be announced in spite of the economy going on a mild downslope still. Copper inventories are at lows for the last 14 months. It's all holding up. Now, as far as the Indian indices go, the equities are now trading, Nifty futures now trading at around the 8,000 mark. 7950 is a strong support level and resistance is at 8,100 to 8,130. Buy on dips is likely to happen around the 7950 to 8,000 mark. Overall things are positive and traders are advised to buy on every dips possible, keeping a stop positionally of well below 7850 or 7800. Now we come to the other scenarios as we see today. First we talk about gold. Gold is now trading at around the 1213 mark. We've been commenting for the last 1.5 months, ever since $1320 to $1340, that the sell-on rise is the best strategy as far as gold is concerned. Now slowly it has been gradually coming down over the past 45 days to a low of 1213 at which it's trading right now. Supports are now seen at 12082, 1200 and below that 1190, resistance at 1240. Next upside would be only on a break about 1240 positionally. Immediate resistance would be seen at around the $1220 mark. Today there is unemployment data that are likely to come out from the US and this is likely to have a huge impact. Overall positionally I would still maintain a sell on rise strategy as of now for targets of 1200 and 1190. The Fibonacci charts suggest strong support zones below that at around the 1175 to 1180 mark, and a sustained break below that could even take down the gold by about $100 to around the 1075 mark. But overall the festive demand has kicked in Indian markets, and this is likely to hold up the gold prices on the local bourses to a little bit higher with a mild premium if need be. On the MCX now trading at around the 26,500 mark, resistance is seen above the 26,700 and support could be tested at 26,450, 26,400 and 26,350. Sell on rises the strategy. Of course, prefer to trade less because of the important unemployment data that are likely to come out today. Silver is now trading at around the 17.60 mark. Over the last 45-50 days, we have been commenting sell on rises at every stage, right from $13.3 mark over the last 6 weeks. Gradually it's coming down, hit past the key support levels of 18.5, 18, 17.8 and now trading at around the 17.6. Strong support is now seen at around the 17.4, likely break of which over the on a closing basis over this weekend could see levels of 16.7. If 16.7 gets taken out, a major downside of over $2 could still be seen in the markets. Resistance is now seen above the 18 to 18.30 mark. On the MCX, it's now trading at around the 39,100 mark. 38,900 to 39,000 is a strong psychological support that has been seen since yesterday. A break below could test up to 38,500. Resistance is now seen at around the 39,500 to 39,600 mark. Overall, in dollar terms, it remains weak. INR is stable right now at around the 60.80 to $61 rupee to a dollar mark. Hence, INR is not a factor that needs to be considered at this point of time. It's only the dollar breaking down and the data that needs to be seen in bullion. Sell-on prices would be a suggested strategy as of now. Wait for data this evening before you take any major positions in the market. Avoid carryover positions. Crude is still hanging around on the MCX at around the 56.50. So long as it trades above 56.50, trades positive up to 57, 57.50 and even 5800. Positional supports are seen at 55.85 and 55.50. 55.50 is a major pivot in the market. A break below on a closing basis for 2 or 3 consecutive closes in the market could see further sharp downside of up to 200 to 400 rupees. Right up to 5200 could also be seen on a close below 5500. So long as 56.50 sustains after data today and tomorrow, levels of 57.50 to 57.80 could be seen. So as of now, one can buy crude with a stop loss below 56.40 for targets of 57.20 to 57.50. Copper, as you've seen over the past few trading sessions, has been trading in a strict range of around the 413 to 417 mark. Yesterday hit a high of 417.90 for a brief period, but then settled lower before the close and closed at around the 415 mark. Now trading at around above shade above 414. Strong support is now seen at 412.5 and resistance at 417 to 418. On a positional basis, only a break below 411 to 412 could see further major downside up to 408, 405 and even 400. On the other hand, after data today and tomorrow, a break above 421 could see levels of 428 to 425 and 428 in the days to come. Overall, it seems a buy on dip strategy with a stop loss below 412 as of now for targets of 416 and 418. Nickel is now trading at around the 1055 mark. After major downslide over the past week to 10 days of around 15% down to the lows of around the 1020 mark, now trading at around the 1057 mark. Strong support is now seen at 1044. If it sustains about 1060, you could see levels of 1070 to 1075. Buy on supports is a strategy as far as nickel is concerned. Natural gas as of now is trading at 235.50, trading above the pivot of 235, which is a crucial mark which was not broken till recently as of last evening. Now around the 236 you could see levels of 238 and 240 as the resistances and support at 232. Data are expected this evening, expected to be mildly bearish with an upswing in the inventories of 98 BCF. If that comes out, then you could see some selling pressure, but major selling pressure only on a break below the 230 mark to 238 for a free downside. On the other hand, upside is limited up to 242 as of now. No major positions are suggested to be entered into till the data are released this evening. Aluminium is now trading at around the 118.5 mark. The resistance is at 118.80. A break above could take it up to 119.60 to 119.90. Support is now seen at around the 117.80 to 118 mark. Zinc is now trading at 138.30. Positive from yesterday. Strong support is now seen at 137 to test the resistances of 139.70 to 140.50. Buy on dips again is suggested there. Lead is now trading sideways in a range of 126.50. Strong support is now seen at 125.40 to 125.50 and resistance at 127.80. Wait for fresh positions as far as lead is concerned. Overall, we see that a lot of data are to be packed in today and tomorrow. Do not trade heavily in any commodity till the data are released. Watch out for movements in the INR and the US dollar index. Have a safe and profitable trading day. Please visit our website at www.akshayashiv.com or lotusadvisoryservices.com/Facebook. Thank you. Have a safe trading day.